What you see on my chart right now is the latest version of my ultimate pullback indicator and strategy script.
This settings guide was taken from within my ultimate pullback indicator and strategy course over on my website at pinescriptmastery.com. This video is up on YouTube for the free trial members. Those who have access to the course get detailed videos on how I backtest this script and develop systems around this tool, including how I set it up with PineConnector to automate my trading. I do offer a 1-month full access free trial to the indicator, so if you're curious about it, go and check that out.
So the strategy script has a lot of improvements from the previous version. The main improvement is that it now works much better with fixed fractional position sizing. So if I pull up the strategy tester here, you'll notice that it's losing 1% per trade and gaining 2% per trade because I have a 2-to-1 risk reward profile set up and a break-even line here. This is custom code. If I come up to the settings here and I turn off fixed fractional position sizing, and I go to properties and I set this to 1% of my equity for my order size. Let me bring up the strategy tester again. You'll notice that my position size is now tiny. We have less than 1% worth of P&L happening here, and my position size is only 92 units on euro dollar here. That's because of the way the strategy tester calculates position sizing. It's not suited for Forex markets. Percentage of equity doesn't risk 1% of your account per trade. It buys or sells shorts 1% of your account balance. So in this case, 1% of 10,000 would be $100. And so in the case of a long trade, I'm buying $100 worth of euro dollar, which anyone who knows anything about Forex knows that's a ridiculous position size. A standard lot for euro dollar is 100,000 units. So 91 units is just, it's not the correct position size. And so I made some custom code that actually calculates my position size based on a percentage of my account balance and the distance to my stop loss, so that when my stop loss is hit, I lose 1% of my account balance. That changes the performance metrics of my system dramatically. The way that I trade personally when I'm trading Forex is I always have a stop loss and I always risk a percentage of my account balance, whether that be 1% or 2%. I rarely ever go over 2%. I usually stick to 1% risk, especially if I'm trading a lot of different markets and different systems on one account. I like to keep my risk constrained. And these stats up here are the strategy tester stats. If we go to overview here, these will mostly line up. The reason the drawdown is different is because this one up here is based on closed trades and this one is based on open trades. But the return percentage is the same, trades taken, win rate. Win rate is slightly different because mine counts break-even trades as winners, but that can be changed in these settings here. If we come down to backtester settings, I'll go over all these settings in a minute, but I just wanted to show you this position sizing feature. Here, break-even treatment. By default, we're excluding any break-even trades from our metrics, but if I set this to count as win, that will increase my win rate significantly. Now we have a 66% win rate. That means 66% of my trades do not lose. It doesn't necessarily mean they're winning trades because break-even trade, if anything, is going to be a small loss, especially on due to commission drag, slippage. But we know that 66% of my trades do not close at a full 1% loss, and that's useful information to know. By default, this is set to exclude, so it's just ignoring break-even trades. The reason I do that is because our danger zone here is the minimum win rate we need to hit in order to at least break even on this system. If we have a win rate below this number, then we're losing money. And this danger zone metric is calculated based on our average risk-reward profile. So the formula for this danger zone is it's a simple formula. I'll type it out. It's 1 divided by your risk plus your risk reward profile equals your minimum win rate. This does not take into consideration slippage and commissions. This is purely in a vacuum. So if I pull up a calculator, 1 divided by 1 plus 2 is 0.333 recurring. And we have an almost 2-to-1 risk reward profile here. So we have an almost 33.33 win rate. That's what we need to hit in order to at least break even with the system. And break even trades obviously influence our win rate in a way that compromises or distorts the danger zone calculation. And so I have a setting in my script to ignore break even trades as if they don't count at all towards our win rate. And this win rate now only counts winning trades and losing trades. And that gives us a more accurate representation of our danger zone, but we can come up to the settings here and display more stats here. So if I turn on break even and win loss, now we can also see our break even rate, so we can get an idea of how commission drag will affect our system. We also have a breakdown of our win rate and loss rate based on direction, so long winning trades and short winning trades, break even count, and the overall system stats. I can also turn on the backtester results here, and that will display our Sharpe ratio and Sortino ratio, how many pips we gained, and our basic performance metrics. I can also turn on, if I scroll down to the bottom here, I have a monthly performance table. This particular feature of the script is open source. I have it published on the TradingView platform somewhere. I'll leave a link below. If I turn this on, that will replace my table down the bottom here with a monthly breakdown of my system performance in percentages. So this is a month-on-month percentage return, max drawdown for each year, our compounded annual growth rate, max drawdown, etc. And if you hover over these, it should give you a little tooltip explaining what each one does, or what each statistic means. So for example, the MAR ratio is a measure of return adjusted for risk, and it's our compounded annual growth rate divided by our max drawdown. It gives us an idea of how quickly the system recovers drawdowns. It's a really valuable metric to have. Anything over 0.5 is ideal. 1.0 and above is very good. And then we also have our year-on-year return for the past however many years are loaded on our chart. So if I bring up the go-to tool here and we go to the very first bar on my chart, because we're on the hourly time frame here, we don't have a lot of years of data to work with. I only have 1, 2, 3, 4.5 years of data. But that does give us 510 trades. It's a decent sample size for this time frame. I can be pretty confident trading this system forward that it's going to be profitable, at least for the near term. Intraday systems tend to not be particularly robust, but this system should at least continue to be profitable for a while into the future, given that it has been for the past several years. Now, this is not taking into account commission. If I open up the source code here, I actually have some commission from my actual broker. This is the broker that I use to trade, Pepperstone. If I paste that number in here, get rid of the C and change this to USD per contract, this works out to be the cost of one standard lot. So 100,000 units or contracts for Forex. Again, the strategy tested on TradingView is not designed for Forex traders. It's designed for stocks primarily. But I've adapted my script to work with Forex. And we can see here that adding in the correct commission, which is about $7 per trip, so $3.50 per open and close of a trade, that's what this works out to be. That affects our metrics quite a bit. But for the rest of this video, I'll turn this off for now, because this number will vary from broker to broker. But it's advisable to put in the correct commission cost into this setting here so that you get accurate results. And so anyway, this monthly performance table has a bunch of tooltips. If you hover over each month, it will tell you the maximum drawdown for that month and the max favorable excursion. So for example, this month, February of 2020, we had a max drawdown of 2%, but we ended the month almost break even. And at some point in the month, we were up 2%. So we had a bunch of winning trades, a bunch of losing trades, and in the end, we ended up break even. Same with this month here, and you get the idea. This gives you a good view into the microcosm of your system. Too many traders just look at the end result. What is my net profit and max drawdown? That's a simplistic view of a system. Obviously, those metrics are important, but what's equally important is how do we get to them? If you made your entire return in the last month and the past 2 years with drawdown, that's a very different story to if you slowly, steadily accumulated that profit over the long term and your drawdown was short-lived. Sure, the end result is the same. I'm not going to argue that, but the issue is, can you stick to a system that doesn't suit your personality and your risk tolerance on a micro scale, on a day-to-day basis? That's the real question. And so when you're developing a system, you have to balance the system's characteristics in terms of its day-to-day performance and month-to-month performance, quarter-to-quarter, year-to-year, versus its entire backtest run results. And this performance table can help do that. Unfortunately, TradingView do not have a lot of these features built in, so I had to spend hundreds of hours building these things out. But the good news is the monthly performance table and the fixed fractional position sizing code and my Monte Carlo code, which we'll get to soon, is all free and open source. So you don't have to buy the script in order to get access to that code for use in your own scripts. It's completely free for you to use. I'll leave links in the video description below. So with all that important backtester sort of information out of the way and position sizing, I want to go over some key settings. A lot of these settings have tooltips, detailed tooltips at that. So I'm not going to break down every setting individually. It'll just take way too long. Look how many settings are here. But the vast majority of these are self-explanatory. But I do want to go over the important ones. So first we have our stops and targets section. By default, the indicator bases the stop loss on an ATR multiplier from swing highs and lows. So the script will automatically detect a swing high and anchor the stop loss off that swing high. Now, this is a bit of a weird setup here because we entered on this same bar that triggered our break-even stop. If I remove my break-even, this trade will look a bit more ordinary. There we go. So now we're no longer moving our stop loss down to break-even immediately. We have our stop loss drawing up here. Now, most systems operate based on a fixed fractional position sizing, so a percentage of your account balance, and a dynamic stop loss that adapts to volatility, or in other words, an ATR based stop. So the ATR is a measure of volatility over the recent price action. The larger the candles are, the higher the ATR will be, and the further away your stop loss will be from the recent swing high preceding your entry or swing low for a long trade. However, there are some systems that benefit from having a fixed pip stop loss, and that's what this setting here is for. If I set that to 10, now we have a 10 pip stop loss from the recent swing high. So that ends up with a 22 pip stop loss because we're measuring from our entry price all the way up to the stop loss here. You can override that in the settings here by setting stop loss price reference to close. Now I have a 10 pip stop loss from my entry and it's ignoring the swing high. And if I change this back to high-low, now I have a fixed pip stop loss from the swing high or low. So if I set that to 1, now we have a 1 pip stop loss above the high. Some systems benefit from tighter stops, some benefit from looser stop losses. This indicator is set up to accommodate most, if not all, pullback trading styles. So for now, I'll get rid of that. Risk reward is self-explanatory. That's a multiple of your stop loss distance. So if you have a 10 pip stop loss, 2 to 1 would be a 20 pip take profit target. So if I throw on a position tool here, and pull that up to my stop loss and this down to my target, we have about a 2 to 1 risk reward profile there. Now again, gaps, micro gaps between entry and signal candles are going to impact your risk reward profile over time. But generally speaking, it's pretty minimal, and the higher the time frame, the less of an issue that becomes. Break-even distance is exactly the same as risk reward, except obviously it sets your stop loss to break even. So if I set that to 1 to 1, like it was earlier, now we have a blue line from our entry price that is 1 times our risk. When price touches this line, we move our stop loss down to break even to our entry price, and this trade was stopped out for break even. Next up, we have minimum risk reward to pullback origin. So it's a bit of a technical term. In this case, this would be the pullback origin. This was the lowest point price got to below this moving average before we pulled back to our entry signal. So if I throw on a position tool here at our entry price, let's say our stop loss was about there, 19 pips. You can see on the strategy label there, it says 19 pips. So I'll set this to about 19. That's 1 ATR from the swing high. And if we pull our take profit down to this pullback origin, you can see we get a 0.6 risk reward. So if I were to set this minimum risk reward pullback origin to 1, now this trade will no longer be taken. There we go. See, it just disappeared. That's because this does not meet the minimum risk reward criteria for that pullback origin. If I set that to 0.5, we'll be taking that trade again. Or alternatively, if I pull this take profit down to the wick of this pullback origin and I change minimum risk reward back to 1 to 1 and our pullback origin reference to wick, we'll also take this trade again. because now we're counting the wick as the pullback origin and not the candle bodies. So you can see this is taking that trade again. So yeah, that's the minimum risk reward filter for pullbacks. Some traders don't like to shoot for targets beyond this zone, and you can tell the script not to if that's your preferred trading style. But I'll leave this off for now. Next up, we have our stop loss price reference point. So this is where we anchor our stop loss from. By default, it's set to swing highs and lows. But as I showed you earlier, you can set this to open and close of the signal bar if you want to. The next setting here is minimum stop loss pips. This is another filter similar to pullback origin reference. You can see right now we have a 19 pip stop loss. If I set this to 20 and the script requires a minimum 20 pip stop loss to enter a trade, now this signal will go away because that trade does not meet the criteria. We have a 19 pip stop loss. We need a minimum of 20 pips in order to enter a trade. There is another setting here, minimum stop loss action. And I can tell the script what to do if the trade fails to meet the minimum stop loss requirement. By default, it's set to ignore trade, so it just simply won't take the setup. If I set it to override, now it's going to add those extra pips to the stop loss to ensure that it meets our minimum stop loss distance. So now a 19 pip stop loss becomes 20 pips because we have told the script to always ensure we have at least 20 pips as our stop loss. It's obviously useful on lower time frames where spread becomes a disruptive factor in the system performance. Here we have a stop loss rounding fix. I'll just ignore that because that's for edge cases. Just read the tooltip if you're encountering issues with your stop losses not rounding properly. It only affects some markets. Next up, we have our moving average settings. These are all self-explanatory. Consolidation look back is how far back to look for candles that cross the moving average. So if we have too many candles crossing the moving average over a set look back period, then we ignore any signals that are generated because we're in consolidation. Believe it or not, it's very difficult to get a script to detect consolidation accurately, but this is one simple rudimentary way to detect it. If we have too many crosses of the moving average over this look back period, so with the default settings, if we have 4 or more crosses of the moving average over the past 10 bars, then we ignore any trades that are generated because we are likely in consolidation. Next, we have our fun settings. These are the candlestick patterns that the script will detect. By default, it's only detecting engulfing candles. It's also detecting long and short trades. I can turn off one direction or the other if I want to. So now we'll only take long trades. We can see how that affects our performance metrics. We have a whole bunch of settings here. I won't go over all of them. I'll leave these for you to play around with. Remember, there's a 1-month free trial to the script, so there's plenty of time to play around to see if it's something that interests you and if any of these candlestick patterns appeal to you. For now, let's just turn on hammers and shooting stars. Again, all of these have tooltips explaining exactly what they do. And now we can see how that affects our risk reward profile. So that diluted our returns slightly. It did not improve our results, but you never know. Some of these candlestick patterns perform better on certain markets and time frames than others. Turn them off for now. Next, we have our candlestick patterns. So we have our maximum candle size to detect as a multiple of the ATR. This eliminates entering on massive candles with massive stop losses and targets. Now again, all of these have detailed tooltips, so I won't go over all of them individually. It'll take too much time. If you have any questions, just email us, support@theartoftrading.com, and I'll answer any questions you have about these, but they're pretty self-explanatory. And I've tried as hard as I can to make the tooltips explain each setting in detail. Next up, we have more of our fun settings, which are our exit settings. So the script comes with a whole bunch of different exit reasons we can use. For example, we have a trailing stop. So if I turn use trailing stop on, this trade will be a good example. Now, instead of exiting at our fixed take profit, the script is doing 3 things. First, it's entering with our stop loss here and our break-even point here. When this break-even point is hit, our stop loss moves down to break-even. It then stays at break-even until our green line is hit. So on this bar here, our green line is hit and our stop loss begins to move down to lock in profit. So with the ATR trailing stop on, we are now no longer waiting for a fixed target to be hit. We are trailing our stop loss when this price point is met or touched by price action. There are pros and cons to the trend following approach. You can see our metrics up here are slightly different to before, and it's just a different trading style. Now this becomes more of a trend following system than a pullback trend continuation system, and we're looking to capture larger moves. There are pros and cons to all of these different methods. The fixed take profit tends to produce more consistent results, whereas a trend following system depends and relies on outlying trades. So we're hoping for the occasional big win, which will make up for the frequent small losses we encounter. There are a bunch of other exit reasons here, and they can all be used in conjunction with each other. I wouldn't recommend using them all at the same time because it's just too much going on. But for example, I could have the ATR trailing stop on, and I could have the RSI engulfing exit on. Actually, let's go with the exhaustion. Again, all of these exit reasons have detailed tooltips explaining what they do. The RSI exhaustion exit is waiting for the RSI to go overbought or oversold and an opposite colored candle to print. So if I throw on the RSI here, the price action here went oversold, and we got a green candle. We exit on the next bar's open, but we also have our trailing stop playing out here as well to lock in profits. So if we don't get this exit reason, that will protect our open profit. And so you can see how we can apply multiple exit reasons together to build a system out of this tool. These are all self-explanatory. They all have good detailed tooltips here, so I'll move on in a moment. But the last thing I want to mention is the use pullback origin exit. So remember before I mentioned how the script has a minimum risk reward profile to the pullback origin, and I need to turn off my exit reasons here. I need to turn off the trailing stop as well because that's overriding our exit reason. But now you can see our fixed take profit is at the pullback origin. So now we are shooting for a retest of the lows of the pullback. Now you can see why the minimum risk reward profile comes in handy with this particular sort of exit reason, because now we can tell the script not to take any trade where we don't have at least a 1-to-1 risk reward from our pullback to the pullback origin. For the remainder of this video, I'm going to turn off all these tables so they're not cluttering up my chart. Let's have a look at a couple more settings before we wrap up this video. The next one I want to mention is this time to close trades. So this I added for closing out trades over the weekend. Particularly, it can work on any day. For example, you could close out every trade, open trade, at a certain time every single day. But mostly this is useful for closing out trades, for example, on a Friday. So this is all in the exchange time zone. So what I need to do here is find a Friday with an open trade. And if I zoom out my chart here we go. We are closing a trade out right here on a Friday. So if I zoom in, what's happening here is I've got my time to close trade set to 10 p.m. on a Friday. This is in the broker time zone. So I've set my chart up to, if we go to settings, symbol, time zone is set to exchange. So everything's lining up here. What I'm looking for here is to close out my trade on the last hourly bar before the weekend. So this is a tiny gap here, but if you look down here at the time scale, this is the last trading bar before the market closes and reopens on Monday. And we get a small gap here. Sometimes that gap can be quite large, like this one here. If we're in a long trade here and the market gaps down and opens here past our stop loss, we will take a larger loss than anticipated or desirable. And so what we can do is set up the script to exit all open positions on the last trading bar of a Friday. So this is the second last bar that triggers the close. On the open of the next bar, we close our trade, and then at the close of that bar, we enter the weekend and we're out of all our positions. Now this will affect our results, usually negatively. Usually holding our trades open over the weekend is a good thing, or at least it doesn't dramatically affect our results, at least in my testing, in my experience. But sometimes there are good reasons why we would want to exit our trades before the weekend, and that setting allows us to do that. Then we have some time filters. These are all self-explanatory. I could turn off Wednesdays if I want to, and now we're not taking any trades on a Wednesday, and my chart turns red. Notice we are not taking trades on a Wednesday. We're not closing them either. So all this means is that any valid signals detected on a Wednesday will not be executed on, but any open trades will remain open throughout that day or period. It does not close trades like the time to close setting does. It just skips that day for entries. We also have a time session filter. This will ignore trades between a specific time of day, just like this setting here, except it does not close trades. It just ignores new entries. Then we have a date filter. This is for time window analysis, particularly. So for example, if we go out to the daily chart, perhaps we want to see how our system performed on during the 2008 financial crisis. So we could set this to January 1st all the way through to, let's go January 1st of 2009. Now the system will be ignoring any trades that do not fall within the global financial crisis period. For example, that's one use case of that time window analysis. Another use case is just doing rolling analysis and just using in-sample, out-of-sample data to test a system. Next, we have our look back settings. Typically, you don't have to touch these, but you can play around with them if you want. Again, detailed descriptions there. We have our miscellaneous settings. Most of you won't need to touch these. If you do, there's tooltips, and if they don't make sense, just send us an email. Backtester settings, I've already gone over most of these. I'll take a clip from a previous video I recorded explaining the Monte Carlo stuff and play that now. This is a really cool feature I think you guys will find very valuable. So now the ultimate pullback indicator has trade skipping, random trade skipping. So if I come down to my backtester settings yet again, and I look for Monte Carlo skip percent, I also have Monte Carlo spread. This will randomize the spread and or skip trades based on a percentage I input here. So the spread will simulate real spread. Again, the strategy tester in TradingView is broken for Forex trading because the spread is not fixed. Trade Nation, a new broker on TradingView, actually does have fixed spreads, which is amazing. I just created an account with them. It's not a recommendation or anything, but check them out if you're interested in that. It's pretty cool. It's very rare to have a broker offer fixed spreads in Forex, where your spread never changes no matter what time of day it is, no matter what liquidity's at. It's pretty cool, but most brokers don't allow that. Most brokers have variable spreads, which change a lot during the day, especially if there's a volatile news event or it's thin trading, like early in the morning. And this slippage input for the strategy tester is a fixed slippage spread, which is useless. It's completely useless because, and I'll explain why. If you know your slippage is going to be X amount of ticks on every trade, you can just adapt your system to shoot for slightly more profit or widen your stop loss slightly to make up for that. It negates, having a fixed slippage negates slippage altogether. It's not accurately simulating the randomness, the random impact that real slippage can have on your account, a variable spread. And so what I've done with my script is I've added a Monte Carlo spread. I'll show you what this does right now. If I set this to, let's set it to a high number so it's very obvious what it's doing. I'll set it to 5. So now we have a variable spread of 5 pips on every trade. And let's have a look at how that looks. Here's a good example. Let's zoom in here. Have a look at this. Now, our exit should have been at this green line if we weren't simulating spread. But you can see my exit is just below that green line. We are exiting, let's get the measure tool, 1.6 pips below my actual fixed profit. And that's going to affect my results, just like real life would. Same with my stop loss. If I find a losing trade, here we go. On this trade, we lost more than we intended to. Now this jacks up my strategy result returns because sometimes the spread will be closer and our take profit will be closer, and that's going to affect our risk reward. In this case, it actually affected it positively, but that won't always be the case. And that's why I also included some settings here to force the Monte Carlo spread to only be negative. So only affect trades in a negative way and only affect our take profit or stop loss. So you can play around with these. Let's say I only want my stop loss to be affected by spread. There we go. That negatively affected our risk reward quite a bit. Still profitable though, or at least in theory, but theoretically, I haven't put commission yet into this simulation. That will affect things quite dramatically. But in a vacuum, these settings, even with the Monte Carlo 5 pip variance, which is unrealistic, that's quite high. Normally it's closer to 1 or 2 pips on average, at worst, if you've got a good broker, that is. And we still have a profitable system here, theoretically, even with that randomness introduced. And now if I add in random trade skipping, let's add a 10% chance of a trade being skipped at random. So now we can see how robust the system is based on
the introduction of uncertainty, randomness. The danger with backtesting, especially single market systems like this in the strategy tester on TradingView, is curve fitting. That is massaging our system to perform really well on how price unfolded over the past few years without regard to the fact that markets change and conditions change and the future will not be exactly the same as the past. And so by introducing some randomness here, here's a skipped trade. This would have been taken by this script. This is a valid pullback trade with a valid candlestick pattern. We would have entered here with a stop loss here. Probably would have been a losing trade, but that's the point. We're skipping randomly. We're not skipping winning trades or losing trades. We're just skipping any random trade, and the system is still profitable. Even with a 5 pip spread and 10% of trades being skipped, we skipped 27 trades out of this sample size. We still have a viable trading system. And that's it. Finally, we have our PineConnector settings. So to use PineConnector, we need to enable this setting and accept the disclaimer. If you hover over the tooltip, there'll be a little disclaimer here. This is dangerous. This is not a toy. If you are using this with real money, there's a good chance you will lose money before you make any money, if you make any money. This is for advanced traders who know what they're doing, have done the backtesting process, and are confident with their system. Don't play around with this unless you're willing to lose money doing it. That being said, I've used this in my own trading profitably for the past couple of years. I'm ramping up my allocation to this system as I'm building confidence. It's a very, very powerful tool. And this is where all these settings live for PineConnector. So you will need to input a license ID. You can use this on a demo account, by the way, so make sure to do that before you do any real money stuff. You need to put in some effort to backtest settings, play with the settings, and find a setup that works for you and your risk tolerance. And if you're unsure, make sure to consult a professional who is licensed and experienced with giving advice about these things. Because I am not licensed and I'm not a professional. I only know how to manage my own money. I have no idea how to help you manage yours. And doing so would be illegal. So it's up to you to figure this stuff out. This is just a tool at your disposal to play around with, do your own homework, and build a system out of. But anyway, we have our license ID. Now, all of these parameters are explained over on the PineConnector documentation. There'll be a link to that below. And again, detailed tool tips for everything. And it's pretty self-explanatory. The only things I think I'll mention here is the default settings here should all be fine. Obviously, you'll need a license ID and to adjust your risk appropriately. Down here, we have symbol, prefix, and suffix. So over on my MetaTrader account, my symbols look like this. I'll put in the suffix box. EURUSD.A is how my euro-dollar market is traded, the symbol name over on MetaTrader. So if I'm using symbol mapping, which is an advanced feature of PineConnector, only available to the highest tier plan at the moment. So for those of you who don't want to pay for that higher tier plan, you can use this instead of symbol mapping. So over on PineConnector, symbol mapping will automatically do this. But if you don't have symbol mapping, you can simply just add your suffix here. So .A will add .A onto the end of this ticker up here. So we have euro-dollar.A would be sent to PineConnector, MetaTrader, and the trade would be executed properly. Suffix is before the symbol. So some brokers might have a symbol that looks like this, .A and then the symbol. In that case, you would put A dot in prefix, and that would fix your symbol when the alert is sent. So they're pretty self-explanatory there, but it varies from broker to broker. So these are blank by default. Then we have a comment, again, advanced feature of PineConnector. In particular, it allows for multi-strategy setups. Although with PineConnector version 3, I think they've improved their multi-instance configuration so that multi-strategy stuff is a lot easier to do. All of that's explained over on the PineConnector documentation, so go and check that out if you're interested in multi-strategy trading. But alternatively, you could just put a system comment in here, like testing, and then whenever an alert comes through to PineConnector, it will come along with this comment so that I know this is sent from an alert where I'm testing something. And finally, we have secret key. Most of you won't need to touch this, but if you're concerned about your alerts being hijacked by someone who knows your license ID, which they shouldn't, but if they do, if you accidentally gave that out, or you're just concerned about security, adding a secret key here, and then adding that secret key over on PineConnector in the dashboard under your account will ensure that only commands and alerts sent from TradingView with the secret key that match to your license ID
will be considered valid. Any alerts that do not match will be ignored. And just before we wrap this up, one thing I want to mention is that the UPI has almost identical settings. Everything here is the same, except for the backtester settings are obviously missing because this is not a strategy script. So for backtesting, I recommend using the UPS. For setting up alerts, you can use the UPS. That'll be just fine. But the UPI is just a little bit more nimble. It has none of the strategy code in it. But if I set up the settings to be the same, so 2-to-1 risk reward with a break even at 1-to-1, and I turn on both scripts, they will both line up. So they're both taking exactly the same trades and triggering exactly the same alerts. The only difference is the UPS has these little tables and the UPI does not have those little tables. Past versions of the UPI, the indicator version of this script, did have a mock TradingView strategy performance table, but I've removed that for the latest version because the strategy tester table is now so much better than it was, and it is way more reliable than the indicator simulation version because it actually takes into account commission. If you input a commission amount into this box down here, and it also has the Monte Carlo code, which the indicator script does not have. And so it's better for backtesting, and these metrics are more dependable on the strategy version than the UPS version. In this version, I used to simulate the strategy tester in my code, but as I said, the new Ultimate Pullback Strategy script does a much better job of that. So I removed that from the UPI to avoid confusion. So in some of the videos in the course, you may see me using these scripts interchangeably, and you may see the UPI with a performance table. Just for any of those videos, those guides, swap out the UPI for the UPS and it'll be just fine. The tables themselves haven't changed. It's just that the table now draws its metrics directly from the strategy tester metrics instead of attempting to simulate these metrics. So when it comes to backtesting, the UPS is the go-to tool. When it comes to setting up alerts, you can use either. The UPI just comes with a few more graphical options, such as drawing the labels, and you've got some tool tips here that explain some information. And that's it for the script. I hope you find it valuable. If you have any questions, shoot an email to support@theartoftrading.com. Let me reset all these to default. I wish you all the best with your trading. I wish you good luck. Trading is hard, but it doesn't have to be impossible. It just requires a lot of work to find your groove and develop systems that work for you. Hopefully this tool will help and aid in that process. So with that said, I'll wrap this up here. Good luck, and I'll speak with you in the next video. Take care.